Here are my 10 best dividend stocks to buy in April. Now, I'm going to go through this list relatively quickly. I'm not going to go deep into each stock because that would make for a much longer video. However, you'd be happy to hear that I have longer videos on each of these stocks on my channel. These are 10 stocks that I follow regularly, and I have plenty of videos on each of these stocks. So if you want more analysis on these stocks, you can find them on my channel. I'm going to go through this list of 10 stocks two by two, starting with the first two. So let's get right into it. The first two dividend stocks you can buy in April is Home Depot and Lowe's. Home Depot offers a dividend yield of 2.75%, while Lowe's offers a dividend yield of 2.07%. And the stocks are not expensive, trading at a forward price to earnings ratio of 17.8 for Home Depot and 13.9 for Lowe's. These stocks benefited tremendously during the earlier stages of the pandemic as people stuck at home took to spending money and time on home improvement projects. That was a big thing during the pandemic, and now that economies have reopened, home improvement spending has slowed down considerably, and that has brought these stocks down also. So I didn't want to buy these stocks at the peak when everything was going right for them and profits and sales were soaring. But now that things have normalized for Home Depot and Lowe's, you can buy them at a much more favorable valuation, and that's why I prefer these two stocks as two dividend stocks you can buy in April. The next two dividend stocks to buy in April are Starbucks and McDonald's. Starbucks has a dividend yield of 2.05%, McDonald's at 2.09%, and they're relatively more pricey than Home Depot and Lowe's, although for a good reason. Starbucks trading at a forward price to earnings of 29.3, McDonald's at 26.17. Starbucks is benefiting from the economic reopening around the world. It's already benefited greatly from the economic reopening in the US and Europe. It's just now reaping the benefits of the economic reopening in China, where it has a large amount of stores. There are thousands of locations in China, and that's the area where Starbucks is planning to grow the most. So it's allowing Starbucks to have more store openings in China as well now that the economy is reopening over there. McDonald's did an excellent job during the pandemic rolling out its digital offerings, its app and ordering online, partnering with Uber Eats and DoorDash and others. And customers have really liked that, and that's fueled sales growth for McDonald's since economies started reopening, because now they have that 1-2 punch of ordering for home consumption and ordering at the restaurants, ordering and picking up at the restaurants, which they didn't have during the pandemic. So now they got that 1-2 punch going. Earnings have soared, and I think longer term, McDonald's will benefit from this because each location now has a greater range of service than it did before. The next two dividend stocks I will recommend for April is Microsoft and Apple, the two tech giants. Now, their dividend yields are not very large. Microsoft at a dividend yield of 0.93% and Apple at 0.58%. But what you can reasonably expect from Microsoft and Apple is for them to increase their dividend over the next several years. Now, their stocks are trading at relatively similar prices to the previous two dividend stocks I mentioned. Microsoft at a forward price to earnings of 29.87, Apple at 26.73. These are excellent innovative companies ingrained in our tech economies that are likely to grow for the next 5 to 10 years. And with that growth in the top line, they will likely increase their dividend payments over time. So, for that reason, I think these are two excellent dividend stocks you can buy in April. The next two dividend stocks I will recommend to buy in April are Visa and Mastercard. Again, not very high dividend yields. Visa at 0.74%, Mastercard at 0.43%, but they have a similar um, positive aspect like Microsoft and Apple in that they can continue growing their dividends over the next several years. If you've been following my channel, I have several videos on Visa and MasterCard where I highlight these are two of the most profitable companies in the world. Very strong operating profit margins, very strong net profit margins. The companies have a strong competitive advantage in that they built out this network over decades, signing up merchants, signing up customers. That's going to be very difficult for any other business to encroach upon. And for that reason, they can sustain these elevated levels of profitability, which should lead to elevated growth in dividend payments over time. And these two stocks are not prohibitively expensive, trading Visa at a forward price to earnings of 26 and MasterCard at a forward price to earnings of 29.34. I always say it's a good idea to buy excellent businesses at fair valuations. You will do well over the long run by doing that. You don't just have to look for cheap stocks to buy to make money in investing in the stock market. You can buy excellent businesses at fair valuations and still make a really good return in the long run. That's what I believe Visa and MasterCard offer. They are an excellent business trading at a fair valuation. For that reason, I think these are two excellent dividend stocks to buy in April. Finally, the last two dividend stocks I will recommend to buy in April are eBay and Target. eBay has a dividend yield of 2.09%. Target has a dividend yield of 2.64%. Now, these two are trading at relatively inexpensive valuations. Target at a forward price to earnings of 18.38 and eBay at a forward price to earnings of 10.05. Now, each of these two dividend stocks were prime beneficiaries during the pandemic. eBay because people wanted to avoid shopping in person and they were fueled with stimulus checks and had fewer places that they can spend that money, and many of them flocked to eBay to buy things that they needed and things that they wanted. eBay attracted millions of new customers, sales exploded, profits exploded, and things were great. Target similarly benefited during the pandemic because, for the same reason, people had fewer places they could shop. Target was named a essential business and it was allowed to stay open when many of its competitors were forced to close, and it benefited tremendously from this macroeconomic factor. Now, that's not the only reason why these two stocks are excellent dividend stocks to buy. No, in fact, they each have a reason longer term to buy it. For eBay, one of the benefits of e-commerce businesses right now is that the industry is going through an industry-wide increase in pricing. So this is the fees that the e-commerce platforms like eBay, Shopify, Etsy, Amazon, and others are charging sellers, right? So the platforms are increasing the prices that they're charging sellers, and the whole industry is doing these price increases. So it's not like sellers can say, well, screw you, eBay, I'm going to go to a different platform that's not raising prices. It's going to be hard to find one because the industry overall is raising prices. And so that's allowing eBay to capture a greater percentage of each transaction on its website. That's gone up tremendously. eBay used to get an average of 9% on each transaction on its website. Now that's up to over 13.2%. So a 400 basis point increase in what it charges sellers on the platform. So now it can capture greater amounts of revenue on the same amount of sales. That's going to be a tailwind for eBay longer term because it's got more room to increase that transaction take rate because it's among the lowest in the industry, so it can go even higher. Just to give you an example, Etsy is up near 20% in the transaction take rate while eBay is at 13%. So I'm not saying eBay will go to 20%, but it's got room to increase. Target, meanwhile, did a great job investing in its fulfillment services. The buy online, pick up in store, buy online, have it delivered to your home within hours, buy online and pick up in the Target parking lot. Those three options, the same day services, have proven to be incredibly popular with consumers, and that's going to be a tailwind for Target longer term. And of course, as revenue and profits go up, that's going to be good news for the potential increases in dividend payments. All right, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so there you have it. Those are my 10 dividend stocks to buy in April. Let's recap. So we had Home Depot and Lowe's. We had Starbucks and McDonald's. We had Apple and Microsoft. We had Visa and Mastercard, and we had eBay and Target. 10 excellent dividend stocks you can buy in April. So that's all I've got for this video. As always, thank you so much for watching. I've hand selected a few videos that I think you'll enjoy that are popping up on your screen right now. Please click on one of those and I'll see you over there.